Should we buy or sell the Australian stock market ETF? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and commenting. So here is Australia. It's in Oceania. 23-ish% from the 52-week low and 13-ish% away from the highs. The ETF is from iShares and ticker is EWA. So we start with the chart, weekly data points. So this ETF is definitively one of those buy low, sell high ETFs. It can go big up, big down within an overall global bull market. 37% up here, then all of a sudden we go down, and this was in 2015. Here, as an example, between 2018 and 2019, it had a bear market all of a sudden. Let's measure. It was 24% bear market. Then it had a bit of a bull market. So basically, this ETF is very volatile. It's messy. So the current event is that we have recently seen a bit of a rally, then we have some pullbacks. And when we go to the daily data points, that is when things get a bit interesting. So let me draw it in like that. So we are currently testing support at the green 50 daily moving average. So it's been relevant back here as well. As you can see, it was a pretty good time to turn bullish, but there's a big but. When the green 50 day become a resistance level, then things can get pretty bearish as well. So it is interesting to see that the bulls are protecting that moving average. We had a golden cross back here on the 17-ish of January of this year, which is a bullish sign. And now we have the blue 100 daily moving average crossing above the red 200 day moving average, which also is a bullish sign. Looking at these other indicators, no, not like any kind of super dangerous levels on RSI or the PPOs, but we have been a bit elevated during the rally. Looking at the daily data points, we are pulling back to a potential support level here on RSI. Also, in terms of the 20-day PPO in purple, there's a bit of a tendency for this level to attract the bulls. So I write 50 daily moving average support here in my notes. I give the bulls a 6 here on the technicals, but that 6 is of course completely contingent on 50 daily moving average support holding. If we were to lose the support level, then the technical picture would change substantially. But currently, this is a support level, so the benefit of the doubt, it goes to the bulls. Here is the seasonality. So you see here that in red you have the last 10 years, green the last 5, 7 in blue. The tendency is bullish seasonality from late January into mid-ish April. This year we have seen some weakness, especially here from early February into the current date. But that is sort of off trend. Then again, you had a rally here that was different from the trend of a pullback preceding during the previous time frames. So the seasonality here is a bit messy. The tendency, though, is for there to be some bullish seasonality on the horizon, which leans me in a bullish direction. Looking at February, the loss so far is, it's the second biggest loss for February. The only year that was worse was in 2020. Even 2008 and 9, during the global financial crisis, even those years were more bullish, had more bullish Februaries. As such, you could argue that maybe the primary trend for February will return, where, as you can see here in the sum, it usually is bullish. March is also a pretty bullish month. The same goes here for April. And when you look here at the monthly returns, usually is good. But when it is bad, it is really bad. 2020 really sticks out, but that was an anomaly. But basically, there is reason to be optimistic about the seasonality. And given that February so far has been pretty bearish for Australia, it could also mean that a lot of the negativity is priced into the market. So I will give this one tentatively to the bulls. I will give the bulls a 3 here. I only give them a 3 because of the disturbance in the seasonality that we saw. There's a bit of a shift here that could become an issue. But, going back to the primary trend, it pulls us in a more bullish direction. So let's look at the fundamentals. I compare Australia with S&P 500. So let's look here at the performance. Year to date, pretty similar returns here. Over the last year, Australia has outperformed America. Beta 0.95 versus 0.99, so a bit less volatile. PE is 20-ish for Australia, 22-ish for America, so pretty similar. Yield 2.23% versus 1.22%, so significantly better yield. 60 holdings versus 505. Oh, this is a new way. Let me just reload the page. Maybe there's some issues. Oh, this doesn't look like it used to do. Anyway, finance is big in Australia. Tech is pretty big in America. Also, you got non-energy minerals pretty big in Australia. So a very big difference here in sector exposure. So I mean, there wasn't like extreme value here, but there's some value case to be made. Yeah, so let me give the bulls a 3 here on the fundamentals. Let's look at relative performance. This is the long-term correlation between Australia and S&P 500 slash America, and that is 89%, so pretty strong. 21% correlation with China, FXI, that stock market ETF, and minus 38% with the dollar index. Short-term daily data points, 77% with America, 62% with China, and minus 91% with the dollar index. So very strongly negative correlation between Australian stock market and the dollar index. Looking over time, this correlation has shifted quite a lot. The strongest correlation we did get is with America, the SPY stock market ETF. So yeah, this market, it's sort of in a messy setup because you have resistance from the blue 100-week moving average, um, yeah, some kind of support level below, but nothing really clear. On the dailies, we lost the 20 daily moving average support. We might have the 50-day below us supporting, and the red 200 day, we had a golden cross back here, which is bullish, but this is it's a rather messy chart. Looking at the seasonality to the left here, it looks bullish. So far, February has been very modest. Usually it's a bullish month, but you see here that March and especially April are more bullish, especially April. That's a very bullish month for America. So let's compare now the S&P 500 and Australia like that. SPY weekly data points. You could make the case that this. I mean, there's a change because if we look at this trend, it's clearly bearish. So far, we have a more of a sort of like a neutral development. It's not outright bearish anymore with lower highs and lower lows, but we don't have like a clear bullish trend yet. But there's an improvement in favor of Australia. We do see that the bulls recently were rejected from the upper end of RSI, there's a bit of a tendency to explore the lower regions, which could become an issue. Looking at the dailies, and in that case, there's a peculiar setup where we are close to touching the low end of daily RSI, which usually results in a bit of a flip in the opposite direction. But the theme here, though, is noise, which can be a bit frustrating. So let's look at the seasonality. So especially here from later February, you see that there's a tendency for Australia to outperform America. Looking at the table view, we have 5% underperformance for February, which is the biggest underperformance we have seen, which from a more contrarian perspective could mean that a lot of the bad news is priced in. Yeah, the issue though is that March usually is a month where Australia underperforms America. It's a pretty messy setup. April usually is a good month for Australia in this pair, except that when you look between 2017 and 2022, all of a sudden the trend changed. May usually was pretty bad for Australia, but recently it's been better. Okay, so when looking at relative performance here, it got really, really, really noisy. Really, really noisy. But I don't like to use the zero. So I like to make some kind of directional position, because if you start to get into like uh, hold or neutral, those kinds of ratings, then you basically might end up as an agnostic. So I will lean in a specific direction. I will lean one. So I'm slightly bullish in favor of Australia, but this one is very, very messy. The primary issue is that there's been a shift in the seasonality. Um, the most likely setup is that when there's a shift, you will revert to the mean. When that reversion occurs, that's the bit of a big question. But yeah, I think that overall, I lean bullish here in favor of Australia. We have a 30.3 here in favor of the bulls. We are at 50 daily moving average support. But the major caveat here is that there was quite a bit of noise in the data. So we do have some time left. Let's look at the top holdings in the Australia stock market ETF. BHP group is the top component. It is also listed on the NYSE. So let's look at the NYSE listing. Yeah, I see a major topping pattern here. So we got 1, 2, 3, 4, maybe a quad top pattern. So it's clearly that there's a ceiling up there. Very stubborn ceiling, like 1, 2, 3, 4, 5. Okay, 5 actually. Yeah, there's a ceiling. There definitely is that. Green 50 daily moving average is offering support. It is a big deal moving average because it was resistance back there. Okay. Now let's quickly look at RSI. Yeah, so we were rejected from a level that has spooked the bulls in the past, also on the daily data points. Okay, now let's go to the seasonality. So the seasonality usually is bullish from late February. So far, February has been bearish, but looking at some of the previous red Februaries, they can actually get worse. And March is not a bullish month. That's a bit of an issue. That's also an issue for the ETF because BHP is 14%, has 14% weight. Here are the fundamentals. The price book ratio, price to sales, very, very, very high. Price earnings is lower. Let's quickly look here at the price targets. It's a bit of an issue. Upcoming earnings tomorrow. The dividend yield 9.76%. That is astonishing yield. However, yeah, the price targets are not bullish. Okay, so this could be an issue. This is why it's very valuable to look under the hood. Then again, if the earnings were to be very bullish, then you could have a breakout. So here is Commonwealth Bank of Australia. Recently saw a pullback. Is it earnings related? Yeah, 3 days ago. Why record profits may not be enough for Commonwealth Bank. Okay, looking at the dailies. Oh, interesting. We have support from the all important red 200 daily moving average. So it's a very interesting level to look for bullish opportunities. Are we at support on RSI or PPO? Very low here on RSI and also the PPOs on the dailies. Yeah, on the weeklies, we haven't pulled back, substantially. But on the dailies here, there's an interesting technical setup. Seasonality is bullish here to the left. This is the third worst month for this stock. March usually is bullish. April also not too shabby. Fundamentals, price to sales isn't that bad. Price book is it's okay. Price earnings also, it could be lower. That's the issue. This is not a value setup. 4.16% yield. The forecast, not that bullish. Oh, the accelerating among the analysts. Yeah, it's very much about the technicals in this case. Then support at the 200 daily moving average. Oh, I lost track of time. Okay, so we have looked at a bunch of stuff now. Looked under the hood. So yeah. Overall, I'm bullish on Australia, but I did not like what we saw in BHP Group and also Commonwealth. But Commonwealth Bank of Australia could be bullish given the support at the 200 daily moving average. If that holds, um, the weighting is 10%. I see on the ETF. So it's an interesting setup for Australia, but I wish the setup was more solidly bullish, but it's more bullish than bearish, but a lot of noise.